All right, good morning, traders. Today is September 10th, 2025. Thank you for being here. Thank you, everybody, Podcast Land, Digital Land, Cyberland, subscribers. Thank you, everybody, for following my content, liking my content, following and sharing, all of it. Appreciate the kind words. Thank you so much. Special shout out to Bob Jordan, John Jordan, Kathy, Sarah Roasted for sharing the content, getting the good word out there. Thank you everybody for following me on my trading journey. Thank you so much. Love that. All right, got some announcements to make. I don't have the graphic. Okay, I could not pick up the graphic, but this Monday, Doug Campbell from Right Way Options is going to have an open house. I think it starts around 9:15. All right. He does make a morning video. I know that early in the morning. So, might behoove you to get there maybe about 8:45, watch the video, and then you'll be ready for him when he opens up and starts his day around 9:15, 9:25. Okay. He'll probably be there early since it's an open house. All right. So it's free. Again, I urge everybody to attend any free education. All right. So he'll definitely be educating people over there. So take advantage of it. All right. That's Monday. This Monday coming up. That would be what's today? Today's the 10th, so that's going to be on the 15th. Okay. Right around 9:15. Again, get there 8:45 so you can watch the videos. All right. Let's get down to it here. Okay, so my SPY pivot this morning is 649.20. Above it, I'm a bull. Below it, I'm a bear. All right, gold made a new all-time high. SPY and QQQ made outside days. Those are higher highs and lower lows. Closing over bullish traps over their 17 EMAs. SPY closed, 2-hour uptrend and a 10-minute uptrend. Okay, so I'll be looking for a continuation of the 10-minute uptrend that we left off with yesterday. FNGU, Diamond Dow made lower lows and lower highs, closing over bullish traps over their 17 EMA. Silver, lower high, lower low, closing inside a bullish trap over the 17. USO, daily downtrend, made a higher high and a higher low, closing inside a bearish trap under the 17. UNG made a lower high and a lower low, closing over a bullish trap over the 17 EMA. US dollar index still in a downtrend, closed near 97.72, 97.71 area. SPY max pain 649. All right, with a put to call ratio about 1.5 puts to each call that expires today at 4:15. Remember, those index options expire 4:15. Securities options expire at 4. The main event this week, CPI data released. That's going to be tomorrow at 8:30 in the morning. Again, traders, look at your positions and see if you need to hedge them prior to the CPI data. All right, we're going to have PPI come out this morning. So again, it may get jumpy this morning. We'll see what happens. Okay, right here we've got bulls. These are all in uptrends over the 17 EMA. These are all in these are bears, all in downtrends under the 17 EMA. If they have a little star next to them, then it appears to me that they are building out a launch pad from which to launch higher. Okay, if they have a little star next to them over here, they are building a platform or a floor from which to dip lower. Okay, so you see the star, look for a 10-minute downtrend, probably a nice 10-minute downtrend for price to dip lower. In other words, it's building out a base. These are probably in bear flags right here if they got a star. And if it's got a star over here, it's probably in a bull flag. Okay. How about that day yesterday? Let's take a look at what we did yesterday. Okay, yesterday was a fantastic day. Brought the account up 9K. All right, on a $28,000 account, that was 9K. That's a nice haul for the day. So far, I've got 10K of excess over the 1% schedule that is available for me to use all right, in order to get my 1% for the day. All right, so we'll see how today pans out. It's looking good so far. This is our 27K. We started this, you can see, just a couple days ago on the open house. All right, let's take a look at some charts. Let's pull up some charts here. Okay, here's SPY. This is our 10-minute chart. You can see price candles, all right, up on top of the 3, riding on top of that yellow thin line. Okay, that's the 3 EMA. All right, and the 3 EMA is up over the white thin line. That's the 10 EMA. All right, no, that's the 8 EMA. Okay, so 3 on top of the 8, that's a uptrend. So we got 10-minute uptrend coming into the close. I'll be looking for a continuation of that 10-minute uptrend when we open up this morning. We'll see what we get. 2 hour, all right, we got the same thing happening on the 2 hour. We've got price candles on top of that thin yellow line. That's the 3 EMA. You can see the 3 EMA is riding up on top of the white thin line. Again, that's the 8 EMA. Okay, so we have a 2 hour uptrend coming into the close yesterday. Now, my favorite trade, 10-minute uptrend over VWAP inside of a 2 hour uptrend. That's inside of a daily uptrend. That's inside of a weekly uptrend. That's inside of a monthly uptrend. That's my favorite trade. Right now, we have that environment. I just want to say 6-9 months from now, we probably will not have that environment. One of these will most likely be in a downtrend. All right, so take advantage of it while you can. I got all those. I like this trade because I've got all of those higher time frames supporting my little 10-minute uptrend. Okay, usually means I can get it to last longer and to move further. All right, so that's why I like that setup or that trade right now. Let's pan out here. Let's look at it on the daily chart. Here's our quad lines from the April low. You can see prices all the way up here at the top of quadrant 4. That's bullish up there. Anything in the upper third is bullish, all right, of the quad lines. Okay, so upper third, bullish, lower third, bearish. And we're still in an uptrend, making higher highs and higher lows. So SPY on the daily chart, bullish, still in an uptrend. Let's take a look at QQQ. Okay, QQQ, price action you can see for daily candle. Yesterday is outside day. Look like, I think that's an outside day. Yeah, that's outside day. Higher high, lower low, closing over a bullish trap over the 17. Again, up at the top of quadrant 4, that's bullish, and still in an uptrend for QQQ. Let's take a look at FNGU. Okay, FNGU got a lower high, lower low, closing over a bullish trap over the 17. Again, top of quadrant 4, that's bullish, still in an uptrend. Let's take a look at Diamond Dow. Diamond Dow getting a higher low and a higher high, closing over a bullish trap over the 17 EMA. Again, bullish, all right, at the top of quadrant 4, and still in an uptrend. All right, let's take a look at IWM. And IWM got a lower high and a lower low, closing inside a bullish trap over the rising 17 EMA. That would be bullish in the middle of quadrant 4 and still in an uptrend right there on IWM. Let's take a look at our technicals. Actually, let's go around the horn and let's look at gold. Gold new all-time high. Okay, doesn't get any better than that. Okay, silver. Silver at 13-year highs up here. Okay, it's not a. Yesterday was not a new 13-year high. Yesterday was a lower high and a lower low, but closing inside a bullish trap over the rising 17 EMA. Top of quadrant 4, that is bullish and still in an uptrend right there. UNG. UNG is bearish. We're bearish on UNG because we're in a downtrend. All right, and we're down in the middle of quadrant 1. Okay, remember this is bullish up here, quadrant 4, bearish down here, quadrant 1, and still in a downtrend that's not moving down. Okay, so you can see we're in a downtrend. We're making lower highs and lower lows. We're no longer moving down. We're having a pullback in our downtrend. So we'll see how high they got to go. In order to negate the downtrend, they have to come all the way up over this right here, this peak right here that pops up over the 17 EMA. Okay, so in order to negate this downtrend, they got to get all the way up there. Okay, right now they're just kind of drifting back up, so creating a bear flag. All right, price action is in a pullback in the downtrend, still in a downtrend though. Okay, that's UNG. Let's take a look at USO. USO got a higher low and a higher high, closing inside a bearish trap under the 17 EMA. USO got a habit of moving up, giving it up, see it move up, and then give it up right back to the pink line. Okay, move up and give it up again right back to the pink line. Same thing again, up, give it up right back to the pink line. So it's just neutral, all right? Just neutral, all right? Not bullish, not bearish, just neutral. USO in a downtrend because they made a lower low over here. All right, so they're in a downtrend currently and just neutral. All right, and we looked at UNG, we looked at everything else there. Let's take a look at our technicals, see what we're doing in the technical department. T2101, this is the market breadth. Okay, you can see we're left off kind of where we were the day before, just meandering to the right. Okay, not a whole lot of new high, new lows going on with the absolute breadth here. Maybe some momentum is coming out of price action right now. Maybe we need to have a little pullback. We'll see what happens. This is T2101 on the 15-minute chart. Okay, so not a lot of participation going on currently. Let's take a look at T2122. A repeat performance of what happened yesterday, the prior day. Again, we just chomped around inside the buyer's chop zone. On T2123, we actually made a new all-time high yesterday, and we look at price moved up just a little bit and then bull flagged over to the right. Okay, so that's still bullish up over this rising 200 SMA. On the 3-bar chart, bigger time frame. Okay, again, new all-time high. Still bullish, still in an uptrend. Top of quadrant 4, you know that's bullish. Up over this rising 200 SMA, also bullish. Still in an uptrend, T2123. FNGU, this is what helped us out yesterday. A little bit of drifting underneath VWAP, a little bit of drifting back over VWAP. All in all, this is a bullish gap a couple days ago, all right, that was never filled on the day that it gapped up, and nor did it get filled yesterday either, okay? Look at price action move up and plank over to the right, okay? It moves up and it holds the higher ground. That's like holding a chin up, all right, for 6.5 hours, okay? That's a show of strength right there. Okay, that is bullish. And if we look at the price action in the pre-market, okay, in the pre-market, this is prior consolidation right here. And you can see that in the pre-market, post-market from last night, price is consolidating over prior consolidation. That is bullish, my friends. Okay, so I have a bullish outlook. This FNGU is, it's an ETN. It only has 10 securities in it. But those 10 securities just happen to be 10 of the biggest heavyweights inside of QQQ and SPY. And I will say when they move together as a pack, they can pretty much drag the indexes in any direction that they choose, all right? So when they move as a pack, whatever they're moving, indexes are highly likely to follow suit, all right? So there's FNGU, all right? Let's take a look at our economic package and look at how we're going to trade SPY today along with the game plan. Okay, let's take a look at the economic package. We can bring that up right here. Start off with the dollar. Dollar's in a downtrend. Okay, right here we've got some what was major support right through here. That was major support. You can see where price action came down through major support. All right, it broke major support. That's all these valleys. See how all these valleys line up right on this green line? So they break major support. It now becomes minor resistance because you're underneath it. All right, and we go up and we try to test the minor resistance, and we fail to hold up there, so we give it up, and now price is moving over to the right. So price is in a bear flag at this time underneath minor resistance. Okay, weak dollar, all right, is not so good for us consumers. So for the consumer in us, weak dollar sucks because it makes all our goods and services more expensive. All right, because it costs more to buy them. Okay, think of this: like if your dollar's worth half as much as it was yesterday, okay, it's going to take twice as much to buy what you used to buy yesterday. Okay, so weak dollar for the consumer and us sucks, but for the investor, it's a wonderful thing because now all of our goods and services are more affordable. They're more competitive globally, all right? Because other currencies would need to convert their currency to our currency in order to pay us, okay? So what happens is it becomes more affordable to them, and we tend to grab a bigger share of the market space out there in the global economy, all right? It means you get growth, all right, global growth by selling more goods and services globally. That's why we watch GDP. GDP shows us what we're exporting, actually the revenue that we're taking in from global sales outside of the country. All right, so that's when that increases, companies do better because they're bringing in more revenue because they're selling to more markets out there. Some markets were we were too rich for them to buy our goods and services. Now opens them up, and now they can capture some of the revenue from those new countries or new markets. Again, new revenue, or excuse me, increased revenue usually transcends down to increased profits, which transcends into increased earnings per share. And you know, when the earnings per share moves up, price for the underlying security, usually it warrants an increase in the price for the underlying security, and there you get profits growth, so you get a price growth in the security. So that's how it works with the investor in us with the weak dollar. Okay, so there's dollar in a downtrend. Okay, on let's take a look at the economic data coming out today. Let's take this off. All right, today we're going to have PPI final demand at 8:30. Thank you, Alan. Thanking you in advance. Comes out in about 11 minutes. NBA mortgage applications at 7. Wholesale inventories at 10. Petroleum report at 10:30. Tomorrow's the main event. CPI at 8:30 in the morning. Think about being hedged before getting into that. It should be hot due to tariffs, okay? So I don't know whether the market's going to say it's hot, but we know why it's hot. It's hot because it's artificially hot, okay? We don't know what the market's going to do, okay? So they could just say, oh, this is hot, and then reverse price and start heading down, okay? Or they could look at it and say, oh, we knew this was coming, all right? He's been talking about it for 5 months now, okay? Here the tariffs are finally showing up. It's artificial. It's a one-time thing, and they could continue going higher. I have no clue what the market's going to do tomorrow when CPI comes in, but I do expect it to be hot. All right, jobless claims 8:30 tomorrow as well. EIA natural gas report, 10:30. Treasury statement, Fed balance sheet. Friday, we got consumer sentiment at 10 o'clock and a rig count at 1. Okay, again, the main event is 10 o'clock. Let's take a look at the earnings front. I think what we got for tonight. Nothing special for today. Okay, nothing here that's going to be market moving. Just a whole lot of familiar names. Thursday, I think we get Adobe after the close. All right, that's about 150 billion. All right, they're going to report after the close. Not going to be a market mover. Probably will help out the tech sector tomorrow evening if they report outstanding numbers. On Friday, nothing special there. Nothing market moving. Just some more familiar names, but nothing that's going to move the markets. Max Payne for today is 649 with a put to call ratio of just under 1.5 puts for each call that expires today. Let's take a look at the game plan for today, SPY. Pick that up on the 10-minute chart. Okay, so pivot, 649.20. Above it, I'm a bull. Below it, I'm a bear. Red erases green entry down here underneath 647.35. Green erases red entry up here over 650. 85. Got an extra number here. Okay. Green erases red entry over 650. 85. Okay. I like 2 days till options. Okay. I like to leverage my money. I like the 2 days till expiration Friday options on the multiple of 5. I like the 9-day till expiration Friday options on the multiple of 5. Both of those with strikes $2 to $10, $2 to $15 out of the money. Okay, I like 10-minute uptrends over VWAP, where price is moving up, and away from VWAP. I like 10-minute downtrends under VWAP, where price is moving down, and away from VWAP. I am not opposed to trading a 10-minute uptrend that happens to manifest down here, in here, or before the green erases red entry up here, okay? I'm not opposed to it. I just like to see it break the bullish 10-minute rubber band candle, okay? So I don't have to wait for the green erases red entry, all right? Because price may start an uptrend long before it gets there. Same thing on the red erases green. If I get a downtrend, okay, and I choose to trade it, because remember, the market's bullish. I'm not a big fan of going counter trend. All right, market's bullish. So if I get a 10-minute downtrend that happens to manifest up here, in here, or long before the red erases green entry, I am not opposed to trading it to the downside. All right, as long as it breaks that bearish 10-minute rubber band candle. Okay. Now regarding options. Okay, in the money, out of the money. Okay. If you want a higher performing option, okay, it will be the in the money option. It will cost you more, all right? In other words, you'll be using more of your capital to buy that in the money option, all right? But it will perform at a higher level, all right? It will be closer to penny for penny performance. It will not be penny for penny performance, but it will be closer than out of the money, all right, options, okay? I'm just telling you, you can trade it, but it's going to cost you more, okay? Me, I like the out of the money, all right? I prefer those. I like a little less risk, and I'll sacrifice some performance to have a little less risk. For me, that's my comfort zone. Okay, that's what I'm saying. I like. You can trade whatever you like. If you want to trade 0 DTEs in the money, okay, and you're confident with it, that's fine. I'm not opposed to you trading that. Okay, I'm just saying this is what I like. All right, and I'm not opposed to trading 0 DTEs either. I actually do take some. Sometimes right after I've taken some of these to add to a position. All right, so there's SPY game plan, okay? Let's look at the pre-market. Okay, I'm going to flip to a different chart here. Okay, you can see we're up here. In 5 minutes, PPI is going to come out. That's Producer Price Index. Okay, they're going to measure the inflationary data, okay, from a producer standpoint instead of a consumer standpoint. In other words, sometimes a producer has to buy raw materials to put his product together and box it up and put it on the shelf at a vendor's store, okay? So from the producer standpoint, it will be the cost of the raw materials that he uses to put those products together. For instance, if you build trusses for KB Homes, all right? Let's say you build trusses, okay? So the raw materials are going to be the lumber that's used in addition to those metal stamps with those presses, okay, that are used to press that stuff together, all right? That would be the raw materials, okay? Is the price of lumber increasing, okay? So that's what we're going to measure, some of the raw materials that go into Producer Price Index, okay? Because that's what they'll be buying is the raw material, all right? So sometimes it's computer chips, sometimes it's other stuff, all right? But that's what we're going to be measuring today in about 3 minutes, all right? So it's the raw materials that goes into what the producers need in order to produce. So just think about it. If their costs go up, well, you know they're going to hand that, pass that along to the consumer, you know? So it's kind of, how you say, it's like getting a look at the tea leaves before the CPI comes out, because if producer price is going up and you know they want to make the same margins, there's highly likely that the consumer price index will rise as well, because they're going to pass those costs, those expenses along to us in the form of price point, all right, in the future, all right? So whenever producer price index increases, you can probably predict consumer price index, which would be inflation for the consumer, will be passed along to us. All right, so this is like a look ahead into tomorrow's number. Okay, so here's SPY. Currently, we are consolidating over, you can see this prior consolidation right through here. I'll box it off. We did it with FNGU. See right there? There's the 8th and the 9th. Okay, and you can see today we breaking out and consolidating up here over yesterday's and the day before's consolidation. That is a bullish outlook, okay? So I'll be looking for 10-minute uptrends, all right? I'll be looking for a continuation of a 10-minute uptrend. PPI may come in hot, all right, and we may get a pullback. If a 10-minute uptrend does happen to manifest after they're done dipping it, all right, lower, all right, I will be highly interested in trading it back up to these overnight highs, all right, or back up to the prior high, all right up here. Okay, so I will be doing this morning. I'm going to mark off the first, the high of the pre-market. There it goes. And I'm going to mark off the low of the pre-market, post-market. And after we establish that range, all right, I'll be looking to trade a breakout of the range. That was pretty nice. All the way up to 655. Well, I just want to say 655. Okay? For those of you that watched me in the past, all right, I talked about 655 and how I'd be tickled if price got up to 655 when I said, look, Wall Street bought the dip over here. They're probably going to want a 2-for-1. In other words, 2 reward for 1 risk unit. All right, and I said this is the risk unit. The reward will be 2 units like that. Well, the first reward unit right there brought us up to 655. Okay, that's it right there. All right, when Wall Street bought the dip, that was the end of the first reward unit, and I said I'd be tickled if we got to 655. Thank you, Alan. All right, so there we are today. Okay, hitting that number. All right, now they like a 2 for 1, so actually we're supposed to go even higher. Okay, if they want their 2 risk for 1 reward. Excuse me, 2 reward for 1 risk. All right, so this is just the first reward. All right, we'll see what the second one brings, but it's another block higher, which takes us up to about 720. I don't know how close we get to 720, but this is a fantastic day for me. We're finally hitting 655. Max pain for the newbies out there is, it happens to be the point where market makers or institutions can inflict max pain or the lowest profit based on the open interest. That would be the outstanding options that expired today at 4:15. Okay, in other words, if we do not go to 649 today, I think that's what it is max pain. Okay, they may avoid it. Okay, sometimes they avoid it if they want to do a put squeeze. All right, sometimes there's a greater reward for them to do the put squeeze than to go after the max pain. All right, in other words, they'll make more money going and doing a put squeeze. In other words, and pushing price higher and keeping the pressure, causing all the puts to buy shares or to buy calls, which then of course exacerbates the momentum to the upside. Okay, so, and actually starts triggering more and more price action higher and higher. So I'm just saying, like that's what it is. So max pain is the point where usually market makers target that area in order to get inflict max pain. In other words, to reduce the amount of payout that's necessary, that's going to be compensated when the options expire at 4:15 today. Okay, all right. So Robert's saying he has SPY calls. Would you be selling profit into the gap? Absolutely, yes. I would be selling into the gap, and I would look for a pullback, from which to J-hook out of there. All right. So that's just me. All right. I'm not telling you what to do, but keep this in mind. Okay. Targets are not. Okay. How do I say it? Don't take targets for granted. Okay. They're not promised. All right. If you've got profit and you're hitting your daily goal, for me, I like to take my profit. Okay? Hitting a target is nothing but getting the trophy, okay? Getting my goal for the day, all right, which is what I'm trying to do, make 1% per day. That's more important than getting the trophy or the pat on the back for hitting the target, okay? It's much better to get to book the gains, in other words. All right, for me, it's much better to have your account grow. Okay, hate to see you lose out on getting your account to grow because you were waiting for price to hit the target. Okay, it's very important that. But keep in mind, okay, they're up. If they consolidate up here at these highs, all right, it could see a leg higher. All right, we could keep going. All right. Again, this is just the first leg of what I said would be the first reward unit to the risk unit when Wall Street bought the dip back in April. numbers must be good. Like I said, I don't know how they're gonna. I don't know how they're gonna interpret it. Today or tomorrow. Okay, I kind of figured they'd be hot with the tariffs. All right, maybe they weren't even hot at all, and the market loved it and they ripped. Okay, tomorrow's a different number. Okay, we'll see what happens. All right, that's it for me for today. Okay, I'll do QQQ. I'll run through QQQ real quick. And I got to get my video rendered for everybody out there in podcast land. Okay, QQQ 10-minute chart. Let's move over to this one right here. And pick up that. QQQ game plan. All right. Again, we're going to mark off the opening range, the overnight range. The opening range is the first 15 minutes. The overnight range is the post-market low and the pre-market high, okay, which is way up here. Okay, you can see already. Green erases red over 580.50. Well, we're way beyond that, okay? But that was my green erases red entry. Pivot 579.95. Above it, I'm a bull. Below it, I'm a bear. You can see above it, so I'm going to be bullish as long as I have uptrend, okay? Okay, just because we're in a downtrend does not mean I'm still bullish. I am still bullish from the picture of the greater time frame, and in the pullback, I would be looking for a J hook or a bounce on support from which to get long on a position, okay? Red erases green, 577.40, okay? So that would be if red erases all the green that's produced, and we have an entry down here, 577.40. I like the same options, all right, for QQQ. 2 days till expiration, 9 days till expiration. Friday options on the multiple of 5 with strikes $2 to $15 out of the money. Okay, and I like 10-minute uptrends over VWAP, and I like 10-minute downtrends under VWAP. All right, I'll be back in 40 minutes to open up the markets with you guys, and we will record it again. All right.